A perfect storm is not something that we see in movies only. It's a combination of some financial crisis combined with other kinds of disasters in a certain region that sends shock to the whole global economy. Some people expect that there will be a perfect storm in the global economy in year 2016. And with Dr. Sinai, a former chief economist at the Lehman Brothers and one of the top strategists in the US, we will discuss where the global economy is headed in year 2016. Dr. Sinai, welcome to the show.
Thank you for having me here.
I believe that you've been to Korea before.
Many, many times.
I see. So what's your impression this time?
Very lively. It's terrific. A lot of young people. Maybe I noticed them more. A lot of young people. I'm older, and they all seem to be enjoying life, working, and just doing what they ought to do.
Well, good to hear. Let's start our discussion. We're talking about China. China has been sending out the news of risks to the whole global economy, devaluation of Chinese Yuan and what's been happening in their stock market, and economic slowdown. And people are worried about that. How would that affect to the global economy? What's your view on this?
Well, people shouldn't get too absorbed in the day-to-day movements of stocks in China or anywhere else. A lot of that is trading and what traders do. And yeah, China's economy is slowing. The data have not been good. And when a country with some bad data reduces the exchange rate, a lot of people worry that things are going to be awful, and they sell. And that's, I think, basically what happened. It happened in August. We had a recovery from that starting in October, and we will, I think, probably recover from this one. So it's a lot of stuff that goes on. It's not necessarily fundamental. Economy is slowing down. We don't think it's going to collapse, and that currency does have to go lower.
I see. The World Bank forecasted that Chinese economy will grow by 6.7% this year, and that will be the lowest in 25 years. So what is the reason of the slowdown?
Exports are weak. Consumers aren't spending as much as China wants them to spend. There's a shift going on away from an export economy to a consumer and services-led economy, and the economy slows down because of that. And investment, business kind of investment, is on the weak side. So we're a little weaker than the World Bank, 6.5 or so. But the main thing is no collapse. That's what markets worry about, because markets are kind of crazy, paranoid, scared. And when you get some weak data with that devaluation, everybody sells for a while.
Well, what's happening in China, or the slowdown of Chinese economy, is the impact is not limited to China only.
That is correct.
It affects global economy, and China is one of the major players in the global economy. So how will that affect global economy as a whole?
China is the second largest economy in the world. That's really very big. So its trading partners, Korea is one of those. 25% of Korean exports go to China. Will definitely slow down on the slowdown in China. Japan's exports will slow down. Other Asian country exports, Germany's exports will slow down. Some of U.S. exports go to China. That'll slow down. And then those countries, the economy slow down, will buy less from others. So it does definitely have an effect to slow growth, but not to create a recession. No world recession.
Wow. It's good to hear again. So given the size and importance of Chinese economy in the global economy, and more specifically for Korea, which is heavily, as you just mentioned, heavily dependent on China for its export and import and all different kinds of economic activity. So how that will affect Korean economy in particular?
Oh, it's probably going to cost Korea half, 3/4 of a percentage point of growth as economists measure it, real GDP. In 2016, we're estimating 2%. If China were up and running and doing well, as it was some years ago, probably the Korean economy would be growing something like 3%. The unemployment rate would be lower, but inflation would be higher.
I see.
It's low right now
So
in Korea.
we should be worried.
No.
To a certain degree.
I don't think, no. The difference between 2% growth and 3% growth is not a disaster. You should be worried if conditions were such that there might be a recession in Korea, that's highly unlikely.
Well, there are lots of concerns and speculations and what will be the next step taken by the Chinese government. And there is a talk of further devaluation of Chinese currency, yuan. What does it mean?
The currency is too high right now. Other currencies, Asian currencies, including the Korean won, went down against the dollar, far ahead of the Chinese currency depreciation. And so China's currency got out of line. And now that the Chinese currency is part of a world basket of currencies, this is very recent, the Chinese are managing the currency lower to be in line. So
to be more competitive?
To be more competitive, to be in line. So that's probably another 5, maybe 10% lower. That'd be something like against the dollar, 7.25 in 6 months or so. Again, not the end of the world. It does hurt other Asian economies unless their currencies go down further. But it does hurt, but it's not at all the end of the world. Currencies need to be in line. The Chinese currency was held high, too high for too long, and now we get an adjustment. When we get an adjustment in a currency, as important as the Chinese currency is in a country that big, you see reverberations through financial markets and some in economies, but not as big as what the financial markets seem to say as other countries.
We've been talking about Chinese currency, yuan, and it has become one of the major currencies in the global economy. And although I'm not an expert, I understand that governments are always trying to do something with their currency. And I think it's one of the cards that the Chinese government is dealing with and trying to do with their currency to affect their current economic state. And I understand that some experts are saying that Chinese government should let the currency float. What does it mean that Chinese yuan being free floating?
What it means is there would be no attempts to manage the currency by buying and selling foreign exchange or various currencies in the open market, as opposed to now when the Chinese will fix the rate of exchange of the Chinese currency to other currencies based on days market activities. And there's a band of 2% around that. So those who want it to float freely, that is not me. I would rather see them manage the adjustment downward than to see an abrupt adjustment downward. Picture, look what happened on just a small adjustment downward. If they let it freely float, the Chinese currency could go down 6 or 7% just like that, and everybody would be terrified that the Chinese economy was going to collapse. And you'd have a huge stock market selling wave go on. And so I prefer it the way they're doing it until it gets in line with other currencies.
Mm-hmm. Just out of curiosity, are there currencies in the world which are entirely free-floating
yes,
outside the government
there are.
controls?
The dollar is.
The dollar is?
Yeah, the Korean currency is. Mm-hmm. And they move in line with other currencies, but they move in line with fundamentals. So in one country like the United States, where interest rates are going up, because the return on dollar assets is higher on interest rate account, money will leave Korea and go to the United States where the return is higher, and that will tend to cause the yuan to depreciate against the dollar. And that happens ahead of time, before the interest rates go up, because everyone is looking ahead and guessing at what will happen and moving the funds right now. It's standard operating procedure. Rates go up in a country if nothing else changes. Countries where rates stay the same, interest rates, their currencies will go down when you have a freely floating mechanism, which is the case for most currencies in the world. Mm-hmm. It's like prices being allowed to fluctuate to where demand and supply will take them. Economists prefer that. Mm-hmm. Policymakers don't like that because they use exchange rates for certain government goals and manipulate those prices. That always sets up bad things.
So
later.
Whether it's market or the government which can sort of decide what's going on in the market.
Costs the government money though, because they have to buy and sell foreign exchange, and not all countries have a lot of foreign exchange. So they have to sell it. That's the case of the Chinese. To move the currency down, they could run out of foreign exchange, and that's a bad spot to be in. Do that.
I see. Well, let's move on to discuss the other major player in the global economy, the U.S.
Right.
One of the big news last year was that they had interest rate hike. Why did they have to do it?
You know, it's complicated because policy is set by economists and we're very complicated. I feel sorry for people who have to interpret and listen to what we say. Our Federal Reserve has two goals. One is full employment, sounds good. The other is price stability. Price stability is defined as a 2% inflation rate in a particular indicator. We essentially got to full employment last year in the United States. Our last jobs market report just the other day was wonderful. Job growth, slack in the labor market diminishing, a little bit of an uptick in wage inflation, the unemployment rate at what the Federal Reserve essentially thinks is full employment. So having achieved that goal and having had zero interest rates for over 7 years, wow. They moved interest rates up a quarter of a point. That's like nothing. That's like nothing. They moved it up a quarter of a point, and it was a very big deal, but it's not such a big deal. It's not going to have much effect on anything. Now what's left is the achievement of a second objective. We are the only country that has two objectives: full employment, price stability. Most countries have just one for monetary policy, price stability. Our inflation rate on their measure is running 0.4%. It's nowhere near 2%. So they're going to have to stay easy and not raise interest rates very much if they do until inflation gets closer to its target. And so we think they'll raise interest rates twice in 2016. Others think, including the Fed, 4 times, because we think the inflation path will be lower. So 2 hikes, total of 0.5 point. We would be 3/4 of a point on Treasury bills. There'd be some return there for investors in cash. And lending rates would go up 0.5 point. In a strong economy, the U.S. is very solid. That's not going to stop anything. That isn't going to stop growth.
But the Fed, the Federal Reserve Board, originally expected that there will be 4 slow incremental hikes in interest rates, and now people expect, like you just said, less than that.
Well, we do, and others do too, but the Federal Reserve, in their statement, said, given our forecast of the economy, inflation, and the labor market, if that forecast happens, then we will have 4 interest rate hikes. Well, they told us what the number would be at the end of the year, 1 3/8 on the federal funds rate. They didn't really say 4. Analysts are saying 4, a quarter point each. In fact, if you look at the speeches and listen to the Federal Reserve members carefully, they have taken pains to say, don't expect it to be regular every quarter. We did that before. It didn't work in the early part of this decade. And so we're not going to do it that way again. So analysts are making that assumption. We are not. We're forecasting. It's bound to be wrong because it depends on inflation. But inflation is going to jump up the next few months. So we think they go a quarter in March and they go another quarter in September because on average inflation will be low. And that will drive the Federal Reserve. We just disagree with the Federal Reserve.
Well,
on the forecast.
If the 4 expected hikes became 2, would that be due to what happened in China, Chinese slowdown in Chinese economy?
It could, yes, because our Federal Reserve is paying attention to the non-U.S. world insofar as it affects the U.S. economy. And yeah, the slowdown in China definitely is hurting our exports of others, and probably knocking a quarter point, percentage point or so off U.S. growth. And it is keeping inflation low because of the weakness of the Chinese economy. It's a major force on why commodity prices are low. China buys a lot of oil, consumes a lot of oil and energy. So, yeah, that's the second largest economy in the world. And if the U.S. had the kind of slowdown that China's having, commodity prices would be declining, just like they're declining on the Chinese slowdown.
So again, what's happening in U.S. Financial policies and so on, it's not limited in the domestic economy of the U.S.
No,
it will have a ripple effect in the whole global economy.
Yes.
How will it affect other economies, including developing countries?
Well, the Chinese slowdown has definitely hurt, along with a lot of other developing countries' economic slowdowns, the world economy significantly. The global economy, as we measure it, we think in 2015 rose at 2.5%. We kind of thought coming into the year it'd be 2.7, 2.8. So it has definitely slowed down growth. Why? The developing economies are now 33% of total global output. China is a big chunk of that. But still, collectively, China, Brazil, Russia, parts of South America, old Eastern European countries, developing Asia, are all part of it. The emerging world is now growing, we think, at 3 to 4%. It used to grow at 8%. So when you take 1/3 of the world's economy down in growth from 8% to 4%, world growth has to slow down. And then you have to wait and see what kind of stimulus is applied as to when the growth slowdown and all of its derivative effects finish, to look for the next upturn in growth. And China's looks like it's not, it may happen in the second half of the year. That's our forecast. Russia is having a terrible year. They're going to have another big recession year. That's creating uncertainty over the politics of Russia. I don't know how they can stand another huge down year in their economy, because oil's way down, and that's an oil economy. And Brazil has a terrible recession, and that's bad for Latin America, where Brazil sits. So you got, except for India, which is growing nicely, and the biggest developing economies of the world, a lot of weakness. So we look to domestic policy for the stimulus and see how long that's going to take and when it happens.
Well, I think you've already think about U.S. currency and U.S. interest rate and so forth, some of the important changes that happened in the U.S. economy. But somehow I don't really understand how the American currency, American dollar, is the value is at the highest in 13 years. And how is this? This should be explained when the whole global economy is suffering. Why is dollar so strong?
Well, the U.S. economy is doing relatively well. It looks stellar to me. I look inside the economy, not just at the data, and we grew at 2.5% this past year. We think we're going to grow at a little under 3%, and for a developed country, that's the best. But inside, it looks really good after some very tough times, and the various performance measures of the U.S. economy, the innards of it, even our deficit as a percent of GDP has gone way down. Debt as a percent of GDP is way down. The consumer is very strong. Interest rates are going to rise. It makes it attractive. It's a good place to invest. It's a good place to locate. We have tremendous influx of foreigners coming in. Our education system is extremely attractive. My own community in the East Coast, around the Boston area, there's a huge influx of Chinese, Indians, and Koreans. It's a wonderful place for education purposes. U.S. is at this moment great. 8 years ago, I couldn't say that. It looked terrible. I wanted to buy gold to protect my dollar-based investments. Now I don't want to buy gold. I want to buy the dollar. And so it's strong. We call it King Dollar now. It's the best currency.
How about other major currencies in the world, like the euro and Chinese yuan? We talked about a little, and Japanese yen. What's your prospect on
well, the
these
euro
currencies?
is a situation where interest rates, the European Central Bank will keep interest rates at zero and keep on buying securities. And U.S. interest rates are going up, and we're not buying securities adding to the balance sheet. Investors and traders will buy the dollar and sell the euro on that. So dollar euro looks like it could head toward almost a parity over this next year. Dollar yen, the Japanese economy isn't really recovering. Its inflation rate is not picking up much. Looks to me like they need to do some more easing. So we think during this year they will, and dollar yen will go to 130. So, and the dollar yuan, we're expecting the dollar to go up another 5 or 6% on the yuan. That would be about 12.70, something like that, against the dollar.
Well, when the global economy as a whole was doing very well and the production line was busy manufacturing goods, we needed lots of raw materials, and most prominently the oil. And now the oil price has gotten very low. Lay people like myself used to think that low oil price is a good thing. But people are saying otherwise, and there is even an expression of low oil price shock.
Right.
Why is that?
Well, there are winners and losers. If you're in the oil producing business, it really hurts. If you're a country that lives on oil, which Russia, the number one producer of crude oil in the world, they're in a big recession. If you're in mining and you're a company in mining and the oil companies are cutting back and not drilling, you don't sell any rigs and you can't make any rigs. If you're a consumer, I believe you're a consumer.
Yes,
I
am.
will bet you coffee at Starbucks. I own stock in Starbucks. I have to open up and admit that if I say something like that on television. You're better off because aren't you paying less per gallon of gasoline if you drive? Aren't you paying less on heating bills? It's a little cold in Seoul today, so you do have some heating bills. You're going to pay less, and that's extra money. And the Korean inflation rates are lower because of that. You're an you're a net energy consumer. So a country like South Korea is a net energy consumer, and they benefit. Higher growth, a lower unemployment rate, and lower inflation. It's good. Plus, South Korea is one of the winners. Japan's a winner. The U.S. is a winner, even though we're big. But our oil companies, they've been killed. They're slashing and burning. It's a depression in mining. And manufacturing is weak too. There's some oil companies there. But you see a lot about the harmful effects because it's happening at the same time that commodity prices in general are going down. And part of that is the weakness of China. All of them going down. Part of it is the strength of the dollar. So you have other countries in the world who are suffering because they export, not oil, but they export commodities. And those prices go down, their revenues go down, they have a tough time. It's all together happening. But just on oil alone, I love it. I'm paying $1.90 per regular gas, a gallon of gas. And a year and 3 quarters ago, I was paying $3.60.
So what you are saying is that low oil price is not bad for everyone necessarily, and it's good for some people.
It's really good for consumers, by and large.
It's good for consumers.
In the United States, we look at the consumption spending that's up. Mining and manufacturing are in depression and recession. But the consumer side of the economy, consumers are saving with the extra money, and they're spending. They can do both because they have, well, I think our calculation is about $150 billion of disposable income from this big decline in just gasoline prices alone, from $3.60 or so to $1.90 or $2. That's
so saving energy costs and
they are saving
spend the money
they're
for
not spending
other.
all the money, so they're saving it. So we see the saving rate go up, and we also see the balance sheet, the household balance sheet improve.
I see. Some experts are expecting that the oil price will be around $60 per barrel in the next 2-3 years. What's your forecast?
No, we don't think so. The range for us is 20 to 40. So we're
much lower.
Yeah, it is, because it's the analysis of supply and demand. The U.S. is a big supplier now. We'll keep on doing that. And the emerging developing world is going to be slow to regain strength, and that's where a lot of the oil and energy demand comes from. Then you have how Saudi Arabia and the various OPEC countries are going to respond on the supply side. And at the moment, it looks like the Saudis are determined to drive out high-cost oil suppliers. That means they keep production up. Their next meeting is not till June. So we put that all together, and we can only do a range, and we're at $31. I would say 20 is probably the bottom. And then as the world economy does better, 2017, then we might be back up at the top part of that range.
I see. So
permanent.
It's
The lower gasoline and energy.
Yeah, it's not only about economy. We should also consider international politics
It's,
and
geopolitics. The politics of oil,
geopolitics.
absolutely huge. Absolutely.
So
huge.
oil is probably the most important, currently the most important raw material for us, but there are other raw material and the price has been going down. For example, the copper price went down under $2 a pound. Why is this happening?
It's a lack of demand from the countries that are producing and manufacturing for commodities because of the world slowdown. When we'll reverse, The U.S. economy should be better this year. The American consumer should drive it. The easy money of Japan should, with lags, lift the Japanese economy. China will be continuing to stimulate, probably bottom out. Europe is already doing better. Eventually the demand relative to supply picks up, then the traders will start to buy those commodities and the prices will bottom out in reverse. It's hard to know where they bottom out. So sometime this year, maybe the second half, my guess is we'll see the commodity price collapse, reverse.
Mm-hmm. As for the significance of the drop in raw material prices, Korea, as a member of global economy, of course, is affected by the drop.
Right.
And Korea imports lots of raw materials and process and export again. So what would be the implication of this lower cost of raw material?
I think that for Korea is probably positive because of the reduction in the costs. But there's still a lot of exporters who are suffering on the export side. It's still hard to figure out, but I think it's a modest, if not small, net benefit for Korea. It shows up in a lower inflation rate, and the Central Bank of Korea will tend to keep interest rates low, maybe even lower them some more. There is room to lower them some more in this country. They might do that.
Do you think this will go on, the lower material cost? This will go on for a while?
Yeah. It'll bottom out, bounce up. I don't think we're going to see a spring up on anything relating to inflation, but sometimes the forces of a sharp reversal build even as people are looking at it and thinking it can't ever happen again. Eventually, the world economy will get strong enough so we're going to have inflation and worry about it again, as opposed to worrying about disinflation and deflation. But in the next couple of years, it doesn't look like it. It's more 3 to 5 years out than 2 years out. That worry about inflation.
We've been discussing several important issues regarding global economy, and let's narrow our scope to the Eurozone. What will happen, in the countries in the Eurozone and some of the major players in that area?
Looks
France,
relatively
Italy.
good. Looks relatively good. After several years of what was called austerity, which was punishing the debtor nations and making things a lot worse. That's my view. Not everybody has that view. And 3 years of recession that I think did not have to happen. Europe did not use easy money. The ECB did not ease until recently. Finally, the austerity has been tempered down. It's much less. The error of the ways is being seen. Look how bad things got. It didn't work. And easy money is being applied. The Eurozone numbers are good. This year we did 1.5% growth. That's twice as much as Japan in Europe. Next year we're projecting almost 2%. And so the UK, the US, and the Eurozone are definitely going to be positive forces for the world economy next year.
But of course, many countries in the Eurozone will have to deal with the political and social issues like the refugee crisis.
Yeah, the refugee crisis is a problem. Aging population is a problem everywhere in the world. And there isn't enough money to pay for all that. So we'll be wrestling with those things for years to come. But look, all the countries are still around. The world is loaded with terrorism and things that are going on, but major powers are not fighting with one another. We are growing more slowly because of all these things than we would otherwise. So it would be nice to have a totally peaceful world, everyone in harmony, managing their policies appropriately, and spending time thinking about how to deal with the old, the retired, the impoverished. That's for our politicians to do, I think, and
we expect the best from them.
We expect the best from them.
Whatever the reality is.
And we don't get that, do we? Yeah, that's unfortunate.
How about Russia? They are a big exporter of oil,
yes.
And I'm sure that they are suffering from low oil price. So what's your forecast?
Basket case. It's a terrible situation. Last year's growth rate was down 4 to 5%. Inflation was up 15% because the currency crumbled. Do you want to own the Russian currency given the situation there, not knowing what's going to happen? They're involved politically and militarily in various parts of the world, and the oil revenues have just collapsed, and they will continue to stay that way. So we're worried about Russia and the political reactions that might go on internally, or what Mr. Putin might do in a desperate situation. It's one of the wild cards for 2016 because Russia, suppose they stop producing oil, suppose they try to raise prices to get oil prices up, to get money. They need money badly. Oil prices go up $30 a barrel from where we are. The markets will go wild, will go crazy, negative. So, and it will be chaos.
So it will be chaotic, and
If
it's
that happens,
unpredictable.
unpredictable.
What will happen in the Russian
We
economy.
cannot get in the mind.
It's
of,
not a good news for the global
no,
economy.
we can't get in the mind of Chairman Putin or anybody like that who runs a country.
Now, then coming closer to Korea, what will happen in Japan? The so-called Abenomics, which heavily relies on lower yen, it's losing steam, in my view. And so what will happen in the Japanese economy?
If Japan numbers don't go the way they want, which is more growth, and that's an issue whether they'll get more growth. We think there's a better set of numbers coming in the fourth quarter, but some of the monthly numbers going out the year were not very good. And inflation doesn't head toward the target. The BOJ will ease some more. They'll do more quantitative easing, and the yen will go down some more, and Japan will get another shot of easy money. I think that eventually will have to happen. They are putting in 30 trillion yen of fiscal stimulus, not a lot. That will probably help some. What is lacking is confidence by the Japanese consumer enough in what's going on so they spend more money. And it doesn't look like that's about to happen. Japan made a mistake. They raised taxes this year. If you want consumers to spend more, you don't raise taxes. Well, Japan's answer was to take care of our aging population. But why don't they wait until their economy's better before they raise taxes, kill their economy first, lose the revenues because the economy's bad? You know, what can I say? I'm a macroeconomist. I advise on policy. I do advise the Japanese government. I would never raise taxes when you want the consumer to spend more. It flies in the face of economics. But what we economists might recommend, if we have any sense in what we recommend, is not necessarily what governments do. But I think overriding it is politics. They have to, and Abe, Prime Minister Abe, has to produce what he said he's going to produce. The reforms are long run. Japan's making a little bit of progress on it. It's very difficult to get women in the workforce in Japan. It's very difficult to, Japan is not America. Women are equal in our country, if not above us men. I defer to the women in my country. They're powerful. This goes back a long time.
Right.
Japan is very different. Changing immigration, Japan is very homogeneous. It helps to have people come from somewhere else. Japan does not have the spirit of risk and entrepreneurship.
They used to.
They did, way back,
yeah.
but that was when the U.S. was very supportive. Remember that we were basically backstopping them with all kinds of support. But on their own, they don't do that. They need that. These are longer run. Monetary and fiscal policy, and if the consumer psychology improves, will do it. It certainly would help if China would grow faster and Asia would grow faster, because it would help Japanese exports. So we think they'll grow a little better next year, and then a little better the year after.
Well, some observers of Japanese economy expect that joining in TPP, Trans-Pacific Partnership, the Japanese economy might benefit from that kind of.
It should. It's just long run. It doesn't happen right away.
And
what happens
is
is
long term.
It's a long term, and if you don't get results in a year or two, politics takes over. People get unhappy, and then now Mr. Abe is okay until 2018, election-wise. So he's got time, and Governor Kuroda, his term goes to 2017. I think Governor Kuroda has not been aggressive enough. Should have eased more. He and the Bank of Japan, but they're waiting for inflation to pick up enough for them not to have to do that.
You briefly mentioned India as one of the exception to this worldwide.
In the emerging,
So what's the reason that India is doing fine and it has good future in your view?
I don't know for sure. I think it's the underlying growth of the population and spending, and just a better mood, and some of the political attempts of the new prime minister that have helped that out. Inherently, India is a country that should grow fast. China should grow fast. A lot of the developed world doesn't have the stuff to grow fast, but Asia does. So India should be a fast grower. Brazil has always had problems on and off. Russia is a one-horse pony, you know, it's just oil. And politically it's a big problem. But India has elements of democracy, well-educated population, very capable people, and so it does stand out as a bright spot. China will be back in that category, I think. We're bullish on China, longer run. We would, on asset allocation, we have China as a longer run investment. It's just that right now it's very tricky. I wouldn't encourage anybody to put an investor, individual investor, put money to work in China quite yet.
Well, now that we've been hopping across oceans and
trip.
visiting many
Yes.
continents, what's your forecast for Korean economy in
Oh,
year
well,
2016?
Yes, we're on GDP 2%, a little lower unemployment rate. Kind of looks like a fully employed economy. Inflation will stay low. We would expect the Bank of Japan to lower interest rates another quarter point or two as we go through the year. It's a positive outlook. But it's lower growth because of what's going on around Korea. And one of the puzzles is why the Korean stock market, in my view, hasn't done better. It's a wonderful country to invest in. Lots of tremendous companies. And of course, I'm treated well as a foreigner when I come here, but I got to say that the services are incredible.
Well, do you really think that there is something called the Korea discount in the stock market as well? Because of the security issues?
Probably, yeah. Yeah, you know, when asset allocators look around the world and the craziness out of North Korea, just in case something might happen. It's interesting, I come here and have for years, and you know, there was one time there was a threat of nuclear bombing of Seoul, and I didn't want to come, and my Korean friends kind of laughed and said, oh, he does that all the time just to get attention.
Maybe you are used to it.
Yeah, so I think you're used to it. And this one is, the problem is that you're dealing with the irrationality of a 33-year-old ruler.
You're worried, yes.
And I do think people get more mellow and mature as they age. Look at me.
Hope so.
so it's a little scary, and but we're marginally overweight. We like South Korea as an investment.
Well, before we wrap up, could you give your own forecast for the global economy?
It's better growth. We did 2.5% on a real GDP basis this last year. It's 2.7 or 2.8, and maybe we get to 3% next year. The U.S. is part of that. It should be higher growth. The consumer has to stay good, and we have to see the stuff delivered from Japan, maybe some more easing. China bottom out and begin to turn up. It looks like the Eurozone is carrying its weight here. The numbers are better. The growth ended up a little higher than we thought. Should be higher next year. Those are the major engines of the world. And if we get lucky and nothing crazy happens, we will have 2 better years. The numbers I gave you are not big improvements, but they're improvements. And the optimism for me is a cautious one, but it's nevertheless optimistic.
Well, that makes me cautiously and carefully optimistic about this year.
Good.
So, Dr. Sinai, thank you for being with us
you.
and sharing your insights.
Thanks.
We appreciate it. Thank you.
Happy to be here.